So, good morning, good afternoon, and good evening, and welcome, depending where you are on the planet, to the Bull versus Bear webinar here on Monday, the 10th of April. Steve Miley here on the call for tradeday.com. Welcome, everyone. Welcome. Now, just as a heads up, if you are live on the webinar right now, can you please type in that you can hear me okay? Hopefully. Can I just get a yes on that from someone? If you are live on the webinar right now, can I get a yes? Can you hear me okay? Because I am doing this from on the road. James and I were both traveling last week. I'm still traveling this week. I'm actually just had surgery last week, so hence there weren't any webinars last week. I'm traveling this week. You can hear me, Greg. Yeah, it's all working. So I'm on the road. So doing this from on the road for the first time. I'm in recovery from my surgery, but still traveling. I'll maybe explain, but we like to be fully transparent here at Trade Day. So I hope you haven't missed my beautiful voice too much. Thank you for coming on, Greg, this morning, this evening, this morning for you, right? And yeah, let's enough of my nonsense now. Let's move on and get to the webinar. So I am doing this, as I say, from on the road. I'm doing it from my laptop as opposed from my PC, so from my Mac. So things might be a little bit tricky for me, but I'm sure we'll get through it. I'm sure I'll deliver a good webinar. So right, let's move on. So let's start off by looking back before we look forward. I'll do a little recap, obviously, because I was out last week, most of the week, not all of the week, but most of the week. So market consolidated into Easter. It was a fairly quiet week, really, overall. Equity markets were little changed. Bond markets weren't particularly changed. The dollar, the FX markets weren't particularly changed. I'll just run through the changes, really. So little change in the US and the European equity indices, consolidating really the gains that we saw from March into the very beginning of April, through last week into early April. US and European bond markets consolidation as well. European markets did go to yields are slightly lower, but remember they were out. Remember we were out on Friday in Europe. US yields were slightly higher, but that's because they moved higher in yield, which we'll take a look at as we go through the webinar. We went to US yield slightly higher on Friday because the bond market was partially open, or even though we didn't have the stock market open, the cash market wasn't open. Obviously, the futures market for both equities and bonds was open, and the bond cash market was open. So US yields did react to the employment number, and we'll talk a little bit about that. So they went slightly higher on Friday. So hence European bond markets ended out the week slightly lower, and US yields ended out the week slightly higher. Forex markets, not really much going on there. The US dollar has been weakening slightly, but not really moving too much last week. And the main real technical development, the big technical development, was gold made another new high for the year, another new multi-month high, and is now closing in on record levels for gold. And oil prices, after that big leap that we had last Monday, and that was on the back of the very unexpected announcement from OPEC Plus for supply cuts. So we had that basically an 8% leap in the oil price back this time last week, last Monday, when we opened in Asian time. The market just consolidated that, didn't really do too much after that. So let's do a bit of a recap from last week. So nothing really moving massively in markets, and partly we had no new news again. So we've had kind of 2 weeks now. So we had 2 weeks of no new news regarding the banking crisis. I think we have to call it a crisis. I don't know what else we're going to call it. So the March banking crisis, I keep calling it a mini crisis, but obviously having lived through quite a lot of various crises, this does seem like a mini one to me, but nevertheless, it's still a crisis, right? It was the second and third biggest banking failures in US history. So how you can't call it a crisis, I don't know. But on the back of that, and then obviously Credit Suisse taken over. I used to work at Credit Suisse, as you probably all know, having heard me talk about that before. Credit Suisse taken over by UBS. So, one of the largest global investment banks, one of the biggest and longest standing Swiss banks as well. So, so we had all that go on, but we've had nothing for 2 weeks. And the market sees no news as good news. So markets consolidating, despite, because you'd have to say most of the data that we saw, particularly through the mid part of last week, was negative. Remember on Friday, we had the kind of really weird, why the US labor market I don't quite understand. I know they have schedules and calendars and stuff, but why you put out the employment report with the cash US equity cash market closed, with all of Europe closed, a lot of Australia closed, South America closed as well. Just I don't get it, right. Bond markets were partially open, but not for very long after the employment report come out. But European markets were fully closed on Friday. US cash markets, we know all about that. And remember, European markets are closed today, guys, right? So Europe's closed. I think a lot of South America closed. I think Australia was still closed this morning. So you've got only very quiet trading in Asia so far. It could be fairly quiet, but obviously you've got the reaction. Equally, you've got a reaction to the employment report still to come from the stock markets in the US. So, but the futures at the moment pointing out to being fairly quiet start. But I'll get to that as we go forward. So, as I say, the middle of last week we saw the US PMI data come out from ISM, and both the manufacturing and service sector indices in here were both below expectations. The manufacturing index 46.3, near a 3-year low, below expectations at 47.5. Service index 51.2, still expansionary, but below the consensus, of a big way off the consensus, which was at 54.4. So that was certainly a negative. That dragged markets kind of a bit lower through the early part of the week. But also the markets were kind of showing a resilience as well, because we didn't get any of this new news. So markets pretty much, stock markets, when I say markets, I'm talking stock markets, ended up net unchanged. The employment result, probably the employment report did us a favor, both because the markets were closed and because the fact, and with regard to the economy as well, and for markets overall, in that they printed pretty much in line with expectation. So we had a non-farm payroll 236 with a consensus around 239. Unemployment rate actually fell to 3.5 with expectation at 3.6. Overall, from what my takeaway on this, and we've got a little article we'll look at in a second, is that we're in this Goldilocks scenario. It's not too hot, not too cold. It seems like the labour market is getting a little bit looser. Okay, so it's not as tight as it was, but it still remains fairly solid, which means that we're going to have people continue to spend. It's really pointing for me to a soft landing still, despite a lot of the other stuff we've got going on. It still points to a soft landing. But the bond market reacted on Friday as if to say, well, this is nailing on, because the employment report was still relatively strong. It was nailing on for an interest rate hike, and we'll look at that as we go forward. But even though the market is now very much expecting an interest rate hike at the next meeting from the Fed, and that's getting priced in, so we'll take a look at that. I think equity markets are happy with that. Equity markets will take another hike, but the markets are also pricing in ongoing rate cuts, which the Fed's telling us they're not going to do. But the market is now very much priced in a rate hike. I think the equity markets are expecting, the bond markets are expecting, and the equity markets are expecting a rate hike, and they're like, that's fine. We'll take one more hike. It's what the Fed do after that's what's going to be important. So we've gone through what's kind of happened. So what we've got coming out, as I say in here, it's a holiday in here in Europe and elsewhere, but US markets obviously fully open today. The big stuff we've got in the week, really, we get the Bank of Canada interest rate decision and statement on Wednesday, and also the Fed minutes. Okay, this is all on the central bank side. We get Williams speaking today, Harker on Tuesday, Kashkari on Wednesday, and Waller on Friday. So we've got Fed speakers pretty much punctuated throughout the week in here. Monday, Tuesday, Wednesday, Friday. And then, as I say, Wednesday we get that FOMC minutes. We also get Bank of Canada. On the macro data, critical is going to be also Wednesday, CPI. So Wednesday's a really heavy day, okay? We need to be really alert for Wednesday. All eyes on Wednesday. I wouldn't be surprised if we kind of clear up today and the post kind of employment report moves, and then Tuesday's probably going to be very quiet, I should imagine. It might even be fairly quiet today. So don't try and look for big moves in here. I would suggest, guys, in the next 1 to 2 days, the market is now gearing itself up for Wednesday. Double bubble, double trouble, US CPI plus the Fed minutes. It's going to be really interesting to see how hawkish / dovish the Fed are, what the reactions were to the fact that we've had a banking crisis since the last time they hiked rates. And then to add on to all of that, we've got earnings season coming up. So earnings season really doesn't really kick off into earnest, and I'll come and share with you the earnings season calendar just shortly that I tend to use in here. But earnings season really doesn't kick off in its proper. It always kicks off with the financials, and on Friday we get JP Morgan, Wells Fargo, BlackRock, and Citigroup. So we'll take a look what's going on for those, and you can see all of that in here. There's some European data in here, probably not affecting us too much in here. We do also get German CPI, which I point out, and UK GDP that come out both on Wednesday as well. So Wednesday's a huge day, and also then for the US we get retail sales data released from the US on Friday, and also that University of Michigan consumer sentiment data. Right, let's move on in here. We've already covered in here the data we've got coming out today. There's William speaking. That's at 4:15. Make sure I've got have I got my, let's see if it's picked. Yeah, I'm still on the right calendar. Good. Yeah, the calendar is still correct because it's coming straight from trade day. So yeah, 4:15, 16:15 Eastern time today. We get, I think that's right, GMT. Yeah, GMT -4. That's correct. Yeah, 16:15. We get William speaking today. That's the only real focus we have today. So job market softens only a bit, keeping Fed on track for a May rate hike. So this is just looking back to Friday, but the participation rate was up to a 3-year high, helping labour supply. So the market is looking like we're really heading towards this soft landing. If we look here, look, morning bid. This is their equivalent of the 5 things to start your day out of Reuters. Okay, and what's it saying in here? Have payrolls resurrected the soft landing? The market looks like we're aiming at a soft landing. Dollar firms as US job report backs Fed hike in May. We spoke about that. And then look, this was Friday's price action in here. If you can see, I'm going to zoom in a little bit more. So this was Friday's on the bond market. So the bond market was open. Friday, we went up in yield. This is the US 10-year yield, notably higher in yield on Friday in here. But the equity markets don't seem too bothered. We're aiming to open up in here today. US stock futures steady as traders focus on Fed. So despite the fact, remember since Friday, right, equity markets were closed, yeah, and despite that, US stock futures are steady in here, and we didn't have a huge amount of movement back on Friday, despite the fact we saw, if we go back in here to the chart, where is it? In here, a significant move back higher in yields, having been nudging down to these lower yield positions, okay, nudging down through 330 towards 325% on the US 10-year note, that we backed up and to 340. Now it's currently sitting around 336, but nevertheless, okay, certainly a positive tone. So what do we have going in? Let's have a look at 5 things to start your day. So strong jobs data. Speculative time just about perfectly. This is talking about the net shorts on bonds. So they did well. Net leverage short positions in 10-year futures climbed by almost 150,000 contracts in the week to last Tuesday. So we've got a build up of shorts. So we're getting shorts building up down here, okay, thinking that we're going back up to higher yields, okay, lower prices. We've got shorts building up in the 10-year market in here, lower prices, shorts implying lower prices, higher yields, okay. So we've had that short build up in the futures market, okay, according to the CFTC, and we did see treasuries go lower in price, higher in yields. What have we got in here? That's nothing really to interest us too much in here, but fixed income volatility is talking about in there. Tech having tough times. We had a 20% rally in US technology stocks, and doing really well in here. It's going to be, but we're expecting the big downgrades, or there are downgrades and profit warnings in place as we go into earnings season. So it's going to be potentially a tricky earnings season for big tech, given that we've had a strong rally in big tech share prices. Okay, future steady, and what we've got coming up, they're focusing on John Williams speaking today, which we've already spoken about. What else do I have for you in here? Futures muted after jobs data raises odds of more rate hikes. Yeah, we know that. I'll take a look at the Fed tool in a minute. US stock futures steady from Reuters and Bloomberg. M may be in sight for global hate rights because Fed nears peak. Yeah, so not only Fed nearing the peak, maybe globally. Okay, maybe we're going to see one more Fed hike and pause could herald pivot by peers. So by peers meaning for by the other central banks, the other global central banks. So we could be seeing the end of the global rate hiking cycle, not just the US rate hiking cycle. Tech rally faces a reckoning ahead of tough earnings season. We already mentioned that, right? Majority of investors expect earnings to drive S&P 500 lower. Okay, so yeah, we're going into that, and we'll take a look at the earnings calendar shortly. Wall Street bank earnings under pressure after crisis? Question mark, right? That's going to be interesting. JP Morgan, we've got this coming up this week. We just mentioned that, and here's the earnings calendar. I'm going to share this now. Remember, guys, when you come go into here, you need to go into the filter. Okay, go into filters. I usually just tick US only. If you want to look at other countries, you can do that, but US only. But I think really important, I tick the 3 stars in here, because otherwise you get hundreds and hundreds of earnings. Okay, in here, these are the big boys. I only really want to look at the big boys. How are the big boys, how are the large cap players going to impact onto the potentially impact onto, oh, it's not loading. I do hope I'm still streaming with you guys. But I'm going to paste this in here. You can still hear me, guys, right? Greg, you still there? Just want to check you're there, or anyone. Just let me know you can still hear me. All okay? I'm still saying that it's live and it's all good. Hope it's all streaming live. But my problem here is that obviously it's hanging. You can still hear me, guys? All good? I'm hoping so. Oh, good. Excellent, Greg. I don't know why this page is hanging now, unfortunately. Now I've gone to the filter and reapplied it. It's not liking that. Could be because where I am. Okay, here we go in here. So I'm going to have to reapply that filter. Let me go and do that in here. Reapply the filter. Okay. See if it will do that. Oh, here we go. So you can see in here, but we do get some little bits of on Thursday actually. Delta might be interesting. Okay, might keep an eye on that. Progressive in here as well, but maybe on Thursday, but more likely Friday. United Health as well, by the way. But JP Morgan, Wells Fargo, BlackRock, Citigroup, First Republic Bank as well. Obviously, could be interesting. Keeping an eye on that. Not particularly big, but obviously important given everything that's been going on previously. So we certainly keep an eye on that one as well on Friday. So that's when we get earnings season kicking off. What else do I have in here for you? So the credit crunch that the Fed fears may already be taking shape. So we're definitely keeping an eye on the credit markets going forward as well. And then finally, where are we setting up as we go into today? Well, Dow Jones in here, you can see pretty much unchanged. S&P 0.3 higher. I'm going to do a really quick whistle stop tour on the charts. We're going to have a quick look at the Fed tool first. So here's the chances now. Nearly 2/3 chance, 66% close to of a rate hike at the next meeting. Okay, and so that's fine. The market's now happy with that. These stock markets are building that in. Okay, and then staying there for June. Okay, pretty much staying there for June. Okay, still staying 25 basis points up. But then by July, the market's starting to build in a rate cut by July, and then certainly by September, a rate cut, maybe 2 rate cuts by September, and then by November, certainly looking then for 2 rate cuts. So we're 25 down from where we are. So we're looking 25 up in May, and then 2 certainly by November, and potentially even 3. So that's 1 up, 2 down, 50 basis points lower than where we are right now is the expectation, the greatest expectation at the moment. So that's probably where the market's getting, is way ahead of itself. So we'll have to wait and see on that one. Where are we? Energy saver turned on. Okay, got it. Okay, thank you. So where are we right now? Well, here's the NASDAQ in here. You can see it's been a bit of a chop fest in here. I mean, I think we do have a little bit of a triangle pattern in here forming. We have had a little bit of a sell-off in here over the last half hour or so. For me, it still stays relatively positive. I go to the daily chart in here, despite I think that candlestick there back on, I think it was Thursday's candlestick, having had the sell-off on, we put the peak in on Tuesday, right? Peak went in on Tuesday. I think that's right, Monday, Tuesday, and then we sold off, and then we got the rebound, and that rebound is the important candlestick in here. Really important candlestick. We did kind of breach this trend line in here, and then the market bounced and rejected. You can also see the 13-period exponential moving average. So that leaves me in a bullish tone. Now, I'm not saying we're not going to dip first, okay, and we're dipping right now. I think somewhere in here, this whole volume area here, somewhere between 13,050, 13,025, in that area there. You can see this build up of volume. We want it to hold down in that area there. That's your buy zone. Pretty much back above that little peak there, the overnight peak, 13,203 and a quarter. That's probably the buy level in there, because it's failed a couple of times around here. You can see it's failed there, just peaked up to there. So up through 13,200 looks more bullish for the NASDAQ. Let's take a look at the S&P again, the same candlestick in here back on. Let me just get the date right, actually. So, yeah, that was, so today is Monday 10th, 9th, 8th, 7th. So we had the partial day. Yeah, so it's Thursday. It was the Thursday. The Thursday rebound in here, dipping a rebound back on Thursday. And then dipping obviously again in here this morning. But if we go in here, there's a little dip we're seeing right now. I think, again, it needs to hold this kind of zone in here. See all this volume area in here? So I think we've got between like 415 down to like 4 sorry, it's 41, excuse me, 41.15 down to like 41, like oh 05, that kind of zone there. I'm looking for that to hold. If it breaks down below this little low in here, which we're getting close to, if we take out 21, then it probably goes down to this kind of 15.05 area. But I'd look for it to hold in there. That's my buy area. You either go for then a break above, back above the peak, or this little peak here, the more recent peak. So you got 41.35. You got the peak in here up at 46.75, or you've also got the kind of the counter trend that runs along the top in here as well. So you might want to think about this one. Whoop, that didn't work. This one here. And that's going to come in around 41.40, break above there. I'm going to do a quick nod because I've been on with you guys for a while to the other markets in here. Treasuries in here certainly look negative. We've had multiple failures in here. Multiple failures. We go back to the yield chart in here for treasuries. Where's that? Sorry. Go back to you. Multiple failures we highlighted here between 330 and 325 in yield. And then it was only just broke below the previous yields in here that we saw back in January. So they were like lined up around 337. 323. Excuse me, I'll get it right in a minute. 333, 332, and then we got kind of multiple tries down here between 330 down to 325, and seems to be rejecting all of that. Okay, and if we go and look at it on the prices, multiple rejections. So we had the prices up here, 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 here. It really doesn't like this whole zone, and then we got the impulsive move lower after the jobs data on Friday. Now we are bouncing, but I'd be looking to sell into that bounce. And if we zoom in, maybe like 30-minute chart. In here, there's the sell-off from Friday after the jobs data. It's a bit of a dead cat bounce, to be quite honest. I mean, I think anywhere you can see we've got the rebound back into here. I think anywhere back towards like 116.02.04 zone, would be the sell zone. But I don't think we even get up there. It looks like it's stuttering already in here. On the bond side, quick nod to gold and oil in here. So here's oil, and there's the leap higher last Monday, and then market's just been almost inside. So inside consolidation. I remember we're on the still on the May contract in here, but still like inside patterns almost on the from the pattern that we posted in here. So we had that big bull gap from the Monday, and then the market, we took out all these peaks in here around the $81 area, and it's just been sitting there inside pattern consolidation. The market really doesn't know what to do. I don't think you could do much until it breaks out of that range. If we zoom in here, I mean, what are you doing there, right? I mean, you're bullish, right, because of the bull gap. But I mean, I think you've got to go with the range breakout. Surprised it hasn't had a breakout to the upside already in here. And then let's take a look at gold finally in here on the June contract here on gold now. So make sure you're on the June contract. You can see in here gold has made new highs, multi-month highs. We did get a dip back lower in here at the end of last week, but rebounding this morning. So going with that rebound in here that we're seeing. So there's the new multi-month highs that we made. Okay, the market dipping lower at the end of last week and now rebounding. And I'll be zooming in here now and then looking at this counter trend line. This is what's important for me for gold. This line that we've got coming across the top in here. Okay, so back above there, and this little breakdown area from here as well. So somewhere above like 2021, 2023 in here for gold looks a lot more bullish. Probably waiting for confirmation up through there. This could easily be back up to the highest, maybe not today, but maybe towards 2036 today, and then back up towards like 2050 in the next couple of days. So certainly looking to run along on that. Really probably wanting to wait for the break above there, but maybe just above these little impulse peaks here, or these little failure peaks, impulse level, where we got those in here, 2021 and a half. Yeah, 2021 and a half probably. Above there certainly signals a more bullish outlook for gold. I'm just going to quickly switch tabs in here and make sure there's any questions. Any questions, guys? Got a few of you on there. Just a little heads up, if hopefully you're still on with me. If you want to ask any questions, please throw them in. I'm going to do these webinars definitely today and tomorrow. I'm traveling on Thursday. Thursday might be tricky, but what I'm probably going to do is do the Thursday one early, and I'm not sure on Wednesday. So we've obviously done today. Tuesday's definitely on. Keep an eye in the heads up. Keep an eye on the in the forums. I'll post in there when I get a better idea. I do have various things that I have commitments to on this side. Again, it's regarding the surgery, so I don't know what those commitments are going to be yet for Wednesday. Thursday will almost certainly have to be an hour earlier because I'm actually traveling to the airport on that day. So Thursday be done, but it's almost certainly going to be an hour early on Thursday. If you can't get on live, don't worry, don't get up too early, guys. You can just catch it up on the recording. The recording sits there in the trading room, and but I'll do that, get it recorded, because on Wednesday we've got the CPI data and the FOMC. So I want to make sure we get a webinar in on Thursday. So I may just record that. I say that'll be an hour. It will certainly be an hour earlier. I'm unsure yet on Wednesday whether I'm going to be able to deliver. If not, James may be able to step in for me, but we'll give you a heads up on that in the heads up and in the forums. No questions coming through. I'm going to wrap it up there. Going to wish you all a great trading day, you guys. Appreciate your patience that we've not been on last week. Hope you're enjoying everything we're doing with Trade Day. We're really trying hard to get this as the best prop firm out there. If you haven't left a review for us, by the way, guys, please do leave us a review. And also, those of you who have left us a review, can you pop over to Google reviews as well, guys, please? I know a lot of you have gone through Trustpilot because that's what we've asked it, but we're having a push on the we're having a push for get some Google reviews up as well. So we really want to grow Trade Day into the top prop firm on the planet. So and you can help us do that, guys. So it's a partnership. We appreciate everything you do for us, and we're trying to do the most for you. So, and thank you, Greg. Speedy recovery. Yeah, I'm all well. No worries. I'm all good, but I just got to tick the boxes, right? So, old man now, got to make sure everything's okay. All right, I'm going to wrap it up there. Enough about me. Have a great day, guys. Have a great trading day, and I'll be back with you on the webinar tomorrow. Cheers, guys. Bye.